Hello everybody, I am Alakh Niranjan Singh, CFA charter holder and professor of economics and finance. Earlier I was in Indian Economic Service and Civil Services. So today I am going to answer the question of, well, not answer, rather I would comment on the paper presented by Professor Aswath Damodaran, and the title of that project is Musings on Market. It is about Adani stocks. We had seen significant fall, about 60-70% fall in the market uh, on the basis of Hindenburg report. So I want to analyze that what Hindenburg report did, that I had done analysis earlier, and now I am going to analyze what Professor Aswath Damodaran has said. I agree with him to some points, but disagree with him on many others. So I especially disagree on the valuation part, and that's what I want to discuss here. So let's begin. And Professor Damodaran wrote on page 2, which I wanted to highlight. He talked about revenue growth rate of Adani firm, and then he talked about the operating margin. So he says that during 2002 to 2015, the revenue growth rate of Adani firm was 24.45% every year, because growth is always every year. And during 2016-21, the growth rate was quite low, only 3.10%. And during 2021 until September 30th, 2022, which is LTM, the growth rate has been 112.7% every year. It means for the last 1.5 years, the Adani has been doubling its income every year, and since it is a period of about 1.5 years, so the revenue of Adani tripled within this 6 quarters. But he says that the sad point is, or the reverse trend is, that operating margin has been decreasing. It is 7.1% between for 2002 to 2015, which decreased to 4.27% during 2016 and 21, and then further declined to 3.6% during the period 2021 to September 30th, 2022. So he says that during that, I have highlighted it, most recent period, Adani acquired a stake in cement business, another capital intensive and low profitability business, when they bought Ho Chim's stake in ACC and Ambuja Cement. So that is just only one. Actually, Adani grew in many areas. So for example, this Adani Port that acquired many new companies. So I have written here, let me see. So I have given only one example, okay? And Adani acquired Adani Ports. It is about Adani Ports. They acquired Krishnapatham Port. They had acquired 25% in October 2020 and the last 25% in April 2021. Obviously, when you add one more port, your revenue will start growing significantly, because that will add the revenue. The base will remain the same, but this will be the addition in the numerator of revenue. Then in Myanmar, in March 2021, Adani started building a container in Yangon. Well, this might not give revenue now. This is giving more investment, and that will decrease this return on capital, because there is no income right now, but investment has already been made, and I think it is still continuing. Then another was Dighi Port, acquired in February 2021, means only 2 years ago. And this port will compete with JNPT Navi Mumbai This has also low income right now because of long gestation period. The gestation period of ports may be years, it can be even 5 years, 6 years until they start earning revenue. So investment has been made, and then Vizhingham Port was commissioned in 2020. So you see that all the recent growth in revenue can be attributed by new acquisitions or new investments. And since the base didn't change until this 2020, uh, it shows this high revenue growth rate. So the revenue growth is not the profitability or not the result of a scale of operations in the same firm, but it is by acquisition of a new firm, which required far larger capital than expanding the scale of the existing firm. Because of his industriousness, finance minister and also the corporate minister, Mrs. Nirmala Sitharaman, gave Mr. Adani, this Adani Group, honorary special mentor award in 2019. This means that this Adani Group is especially talented in the field of entrepreneurship. So, because of these high growth rates, this company has downward trend line in operating margin. The operating margin shows the income from operations, okay, out of total investments. So operating margin will obviously keep on decreasing because of that long gestation period. The investment is made today, but operating margin will come much later. So, however, accountants account for this today's income, means today's operating income divided by total investments. So that's how they calculate operating margin. Now, Professor Damodaran says that it is also worth emphasizing that even with these investments start paying off, they will remain low margin businesses, and that is where I disagree with him completely. Why will they remain low margin business for Adani? They may remain low margin business for others, but for Adani, definitely not. And why? Because Adani will be leading company in the infrastructure field. It will not have competitors. And second thing, the inflation will have a factor. Means the prices are today, the banks ask for loans in nominal terms, so the investment value will remain the same in rupee terms what it was in 2020, 21 or 22, while revenues will be at higher prices. So inflation will also improve his chances of higher operating margin. And secondly, since Adani is going to be a leading company or near monopoly, they can raise the prices, and hence they will raise the operating margin. Now I go to the next finding of his, and he says that return on capital was 14.69% during 2002 and 15, which decreased to 4.45%, and it further decreased to 3.18%. So it is return on capital. Well, capital has been invested most recently after 2020, and so it is not having a return because of long gestation period. Since most of his capital is invested in infrastructure projects which have very long gestation periods, this is fair. Return on capital is going to be low. Same with the sales and investment capital. Well, sales will come only after this gestation period is complete. However, invested capital is counted today, and sales is also counted today, but this ratio is not correct to estimate the value of stock of Adani, because both these are static as of today, but in future the capital invested will be less. They need only maintenance capital once the project has been completed, while sales will be much higher because Once their projects has reached the full capacity, means they are fully operational, then sales will automatically improve. And then third, Adani will be near monopoly, so he can definitely make supernormal profits or economic profits even in the long run. So that way, using this current figure is not correct for actually sorry, comparing multiples. And the one multiple is sales by invested capital. So, based on the current scenario, Professor Aswath Damodaran concludes that, but as with Mark, the reality check is that these businesses will struggle to earn their cost of capital. And I already said that no, the margins will not remain the same, and these, at least Adani will not struggle to earn its costs because it will be the dominant company. Well, there are many reasons why it will be dominant company, and dominant company always sets the price because it is near monopoly, so it will not run on losses, but it will earn economic profits. Now he talks about Adani debt load, and he says that during 2002 to 15, the percent of net debt of total capital value was 91.26%, which increased in 2016 to 21 to 106.19%, means the debt was more than the value of the company, and that was because of restructuring of this Adani Group when they separated the parent company into many other companies. At least there are 8 companies now as per Moody's latest report, because in the credit rating Moody's downgraded 4, outlook for 4, while it kept the same for the outlook for the another 4. Okay, and in 2021, this percent of net debt reduced to 82.31%. And percent of net equity is, obviously, it has been the best now, 17.69%. Historically, it had been 8.74%. And then that has decreased to minus 6.19%. Means Adani was borrowing at that time to pay the dividends. Okay, so in that case, the value of the debt is more than the value of the company. So here is more details. So he says that, okay, what is now the current situation? So he says that debt to capital in the book value was 64.92%. However, this book value is useless measure, because book value is what is the cost of investment at the time of investment. The prices are old. The market value is the one which is dynamically used, which is current scenario, and it is used for equity pricing. Since I had been an equity researcher, so I know that which ratio to use the most for reaching accurate equity price. So this part, second row, says that debt to capital market, means the price of Adani was 38.38%, which increased to 55.15% during 2016-21 when they were restructuring and growing as well. And now it is very low, 16.89%. Means the percentage of debt on the total value of the company is only 17%. But he says that, okay, the rise in, okay, he says the interest coverage ratio better captures the limited buffer of the company has on its debt load, since the operating income is barely higher than interest expenses. And what he means by operating income, I had already discussed that why operating income is low. It is because the investments are being made today, but gestation period is of about 4 or 5 years, or it can be even more depending upon the how big size the project is. We cannot build a port overnight. It takes not even within a year. It takes about a few years. So that's why they have low operating income. And interest coverage is calculated operating income divided by interest burden or interest payment that they have to make every year. So in that case, what happens? If it is 1.14, means If the operating income is rupees 1.44, interest payment will be 1 rupee out of that. Okay, so that is what it means. Normally it should be much higher. Well, it was good during 2002 and 15, but right now, as I said, it is very low because of this long gestation period and high investment required today. So if the high investment has been made today, the interest will be paid on the entire investment, while the revenue will come much later. So in later on, when the projects are completed, the interest coverage ratio may become 5 or even 6. You never know. Depend, since Adani is a dominant company. Now, this situation has happened only because of aggressive growth. Adani has been growing very fast. As you saw, the revenue increased by more than 100% every year. And if Adani faces problem, then will he default? No, he will not default because of two reasons. First, Adani can sell some of the shares because right now they control 72.5% of the shares. And also, Adani is a diversified company. So they have many companies, 8 companies, and they are spread across different regions of India in the entire west coast and east coast. So they will be making profit on one or the other. Even if they don't make profit on one or two, they will be making profit on remaining 5 and 6. So that way, diversification reduces the risk. Now, the question is how to pay debt apart from these, even if income is low. Well, Adani can always borrow from other banks and pay for the time being because his projects are solid, and most of the time the debt is revolved. It is not that the bank pressurizes to pay the debt. Bank also has to earn interest. So if he says that, well, Adani is having good cash flow and also making payments on time, then they will revolve the same debt. And that's why I said that Adani has lower risk because it has a diversified business, and some companies have undiversified business. So if they are not able to compete on their undiversified business, they have to close down or they have difficulty, and which is not the case with Adani. Since Adani is having a highly diversified business in western and eastern coast. Now I go down to the ownership. Here you see the ownership of Adani. Well, Professor Damodaran has written that Adani Holdings is 72.5% of all the stocks. Means these stocks are not available to the people in the market. Then how much is available? Only 100 minus 72.52 means 27.5% of the stocks are available in the market. Out of these, foreign institutions, they hold 15.3%, and Indian mutual funds only 1.18%. LIC is the largest investor amongst Indian institutional investors, and it is they own 4.2%. Retail investors like you and me, who have no power, we are in millions, but we have no power to influence the stock prices of Adani, we count for only 2.08%. And others, which includes SBI, Bank of Baroda, and probably the family members of Adani who have been accused by Hindenburg, they contain about 4.72%. So that's the ownership structure of Adani, and this can create some problems as it created right now after the Hindenburg report. Now, why will it create problems? Because I will explain you in detail right now. Okay, so this part was ownership. So let me explain the ownership structure, how it influences the market. So here I take you to the Excel spreadsheet where I have drawn the graph. So this graph shows that 72.5% means beyond this side, this is the total demand curve of stocks in the market. Like Initially, when the stocks are very few to be sold, the price of stocks is very high because only the richest will buy it, and they will pay the highest price. After that, when more and more stocks are sold, the less rich people will buy who have lower willingness to pay. And in the last, when more than 50% has been sold, common people who have low income, middle income people, even they can buy the stocks because the stocks have become much cheaper. And so this part, the demand curve goes on like this. As the percentage of stocks goes open in the market, means the float percent increases. So it was earlier say 10%, then from here to here is 20%, then 30% will be here and beyond this. So that way I have calculated the what percentage of stocks are there. Actually, what has happened? Let me. Okay. Actually, I wanted to do this 10% is here. So I should I shift it little bit this way? How did it happen? Let me shift it this way. Then now I am better suited, but actually then no, it will make some problems. But anyway, please understand that way. So this area is up to the red area is 10% is here, 20% is here, 30, 40, 50, 60, 70 and 80%. Why I didn't go to 100% is that all the promoters must keep 20% of their stock around, otherwise they will not remain the owners. So they will return, they will lose their entire control. So normally they keep ownership of stocks at least 20% with them. So this red area shows this FII, financial institutional investors, which accounts for 15.3%, which I showed you here, this 15.3%. Okay, and 72.5% is owned by Adani, which is not available for sale. So I put it this side because anyway it is not available for sale, and so the common people cannot buy also. And it is a dormant kind of shares. These will not be influencing market price. Then after these FIIs, it is this LIC 4.2%, Bank of Baroda and SBI about 1.5%. Then retailers like us 2.1%, and then family of Adani, whom Hindenburg report accused that they have built shell companies in Mauritius, like 38 shell companies in Mauritius. Then they have built some shell companies in Dubai, and then they have also done some companies in Caribbean island. So that way these are tax havens, and where Adani family keeps money and does market manipulation. But the power there share is only actually 3%, not very big, but yeah, it can play a big role. And then domestic mutual funds hold 1.2%. So that way, on the one hand, FIIs, foreign institutional investors, control 15.3% out of 27.5%, because only 27.5% is the market float. So they have, as a relative, 55.6% of the float. They own it because 15.3 divided by 27.5 is 55.6% of the float, and that's a very big power. Means they control about 55.6% of the volatility of stock prices of Adani Group. And these remaining LIC, well, they are passive investors. They don't buy and sell, even though they are the largest domestic investor, but they don't do for profit or manipulation like FIIs. Same is the case with Bank of Baroda and SBI. And we retail investors, we have no power because we are in millions and we can never be united like FIIs, because FIIs are only few, not that they are 50, probably less than 10. Okay, and they will be united because of Hindenburg report, since most of them are American. Sorry. And then we have domestic mutual funds who control 1.2%. They also are inactive players, though they keep on buying and selling, but they cannot influence the market price of Adani. So only two groups, family of Adani, which contains 3%, and FII, which contain or which hold 15.3% of the stocks and 55% of the float. And this 3 by 27.5 becomes about 9%, well, 11% of the float. So this one is 11% and this one is 56%. These are the two dominant players accounting for variation, or what I would say, change in value of Adani stocks. I will discuss maybe once again when I come back, when I go to the next point of Professor Damodaran's article. Now, he says on this that what I wanted to discuss was okay. He says that by itself, the surge in pricing multiples is a feature of volatile market. No, the pricing multiples of Adani have surged minus 214 times instead of 15 times. It is not because of volatile market, but it is here it is. So he said P by E means price of a stock divided by earning per stock was 35, around 35 during 2002 to 15. It fell down to 15.09 during 2016 and 21. And in 21, it increased to 214 times. So if Adani stock is earning just 1 rupee per share, the market price is 214. Means the profit is just even 1 divided by 214 is what? 5 cents. Okay, no, 1 divided by 25 cents means 0.5 cents. So, which is far less than the interest that the banks pay. Then why should this multiple be so high, 214? Actually, banks pay on all deposits, you get 6% of interest from banks. Then why would anybody invest 214 and get just 1 rupee, while the bank on investing 214 will give 12 rupees? And here comes the reason is the growth. The growth of the company is very fast. So today it is 214, but maybe after 3-4 years it may become just 20. And because or why will it be 20 so optimistic? Because the earning will be very high, and even if price increases, say earning increases by say 1000%, means 10 times, and price increases by 2 times only, so it will be how much? 400, and earning becomes, I said, how many? 10 times. So this ratio will become 40. And if earning increases 50 times, then this ratio will be even less than that. It will be around 20. So that way we can see that PE of a mature company is much different from the PE of a fast growing company like that of Adani. And this comparison is actually useless. Many companies have negative earning like Uber, or even Elon Musk Tesla had negative earning until last year, and its value was Elon Musk was the richest person of the world, owning more than $300 billion. So same is the case with Adani. It is possible that this PE, see it in a not in a static perspective, but in dynamic perspective. So let me see what he says. Then price to book age doesn't matter because book value is static. And EV by sales means enterprise value by sales. Yes, this matters, and it has improved. It is now 2.71. Means if the sales is of 1 rupee, the entire value of is 3, means, or well, 2.71 exactly. And then EV by EBITDA. EBITDA is earning before interest, taxes, depreciation, and amortization. So that is the earning that the firm compares with its enterprise value, and this one is 52.59, and it is high right now because of the same reasons that Adani is not earning because of long gestation period, but investments have been made. So that's why enterprise value is so high with respect to EBITDA. Now, on those things, Professor Damodaran concludes that the surge in pricing multiples is a feature of volatile market. No, actually, it is not a feature of volatile market. It is a feature of growth expectations. Means if the company is growing very fast, its future value will be very high. I think I have written it somewhere. How to calculate? Okay, it is. I have written it in the Word document that how do we calculate this growth. Okay, so growth expectation, the formula is like this. When we calculate this value of enterprise, it becomes sorry, surge in pricing multiples happens because of free cash flow to the firm divided by WACC minus G. WACC is weighted average rate of weighted average cost of capital, which includes the cost of share and cost of loans. And that way weighted average cost of capital is calculated and minus growth. Now weighted average cost of capital may be around 7% or 8% for Adani, or well, it can be 9% also. But if it is growing, as you saw, that revenue growth was 114%. So if it is growing at that way, then 8% minus 1.1 for it will become negative. And that way it is not to be compared, because it will be too high. It means the value of free cash flow will be infinity if we take this growth higher than this WACC. Or if growth is equal to weighted average cost of capital, means if cost of capital is 9% and the company is growing at 9%, so free cash flow divided by 0 will give infinity. And that's why this volatility is not because of volatile market. It is because of specific to the company. Indian stock market is not very volatile right now. You have seen this market stagnating around 17,000 NSEI index, means around 18,000. So it is not really volatile. But Adani has so high multiple because it has very high growth prospects. Now, what does Hindenburg say? Hindenburg says that, Professor Damodaran says that in addition, the question of which group of investors is leading the push to higher prices is a puzzle. Well, I will explain this puzzle right now, going to that graph. Since, unlike Agatha Christie mystery, the list of suspects is short. Yeah, the list of suspects is short. What did he mean by list of suspects? These. Only FIIs, 4 or 5, that BlackRock and a few others. And then LIC, Bank of Baroda, SBI, these are actually not the one which will cause volatile. So the list is only 2. One is the family of Adani, which Hindenburg complained or alleged. They contain only 3% of the stock of value. So when they become active, they will come in this active group. And maybe 3% is probably this part only. So, such as if I say 3%, then draw a straight line from here to here, it will be about 3%, this part. Since 10% is there, so 3% will be this part. So if they go in that direction, then we can say that, well, they have become active manipulators. So 3% will be less than this, and they can raise price. How much? Since 3% is this is here, they can raise up to here. Means they reduce it to 2%, then 1%, 0%. The price will go away from here to here. Though it is not very big, but maybe they can manipulate price to 10% higher or something like that. Though I can tell you, this is the area of highly elastic demand curve. Okay, this portion. So if a small percentage of price is decreased, the sale in volume will be much more than the percentage of price decrease. That is the feature of highly elastic demand curve area. So here, since it is only 3%, and well, they are about 11% of this market float, so there may be 11% people. Now, what will these 11% people can do? How much can they contribute at most? In a highly elastic demand, they cannot contribute more than 11% of volatility. What about these guys who are having 55.6% of float? Well, they right now caused a drop of 60 to 70% of this. So how could they do that? Because of this very high elastic nature of the market, means when they reduced this, when they sold it, okay. So in the high elastic market, earlier they were owning, and then they sold it. They did the short selling, and so prices fell very significantly, and that is because of this small float. Don't go by 100%. The float is only 27.5%. So if only 5% of the stocks are sorted, it will be around 20% of the market value. That is the power of having low float and being pre-investor during that small float. And that is the drawback of Adani company. Means they control 72.5%. The legally maximum requirement is 75%. So if a company controls 75% of the market capital as family capital, then it is going to be far more volatile. Or well, not, I didn't want to say that. I wanted to say that if these free float players want, they can easily change the price very quickly, because then they get much more power because of this low free float. Okay, so that's the reason why Adani prices fell so swiftly, only because about 5 to 10% of its stock were sold by FII, and the price fell by 60 to 70%, because these even 5 to 10% of controlling total stocks, they controlled about 20% of the market, actually, free float market. So that's why they are far more. I can explain you in more detail. If you have, just contact me personally, and if you want more clarification, then I will be able to explain you. Now I go to the next part. So Hindenburg says that they manipulated, and probably it is correct, but means they can manipulate. Since they control 11% of the free float market, these people can manipulate prices by 10%. And the advantage of raising artificially prices, I am not saying that they manipulated, they can. And if they can, then not sure when they will do. They may or may not do, but I am not sure when they will do. And even if I say that, okay, they did, the price might have gone up by 10%. The prices have been raised definitely by the 3% float, 3% of total family holdings who are not considered as family members, but they are investing entirely 100% in Adani stocks. So I suspect them to be controlled by Adani family. I suspect it, okay? I am not a law expert and I don't have any evidence. So I cannot say that they are family members who have done it. I suspect it, it is possible. Okay? So that has been, so here Hindenburg has some merit, but not that it required 60 or 70% of the downfall. So Professor Damodaran speaks about that the shorts speak up, and he says that Adani Group has grown with a disproportionate dependence on debt, and that the rise in stock prices in the last 2 years has worked to the family advantage, as it considers selling some of the ownership stake to raise fresh capital. That's fine, I agree with him, that if there are higher prices, they benefit two ways. First, they sell it in the market, they go at higher price, they get a lot more money than what they would have otherwise gotten. And it is possible because of limited float. It works in the favor of Adani. And then Professor Damodaran says, it is also widely known that one of the competitive advantage of the group is its closeness to political power. Well, it is an open secret. All of you know that. And arguing that the company is benefiting from its political connections is neither novel nor uncommon in Indian business setting. Yes, not only in Indian business setting, even in American business setting. When Trump was in power and Elon Musk was closer to him, his fortunes rose and he became the richest man of the world. With Biden, well, he's not the blue eyed boy of President Biden, so he lost his value by $200 billion. Only person in the world and in the history to lose so much wealth. So that way, this political connection works a lot. Okay, how it works, I know that, but then that is not the topic of discussion here. Now, Professor Damodaran said that only these kind of three frauds can happen: accounting fraud, misstatement, market price manipulation, which those 3% of the stockholders of family members of Adani might have done. I am not saying they have done, might have done. It is the prerogative of court to say whether they did or not. I am only saying that they might have done means they might not have done. And second is institutional corruption, means we have SEBI, where Mr. Adani's relative was there, who resigned only last week. And then the banks and Indian regulators are there, who are the regulators. So if they are corrupt, they will let Adani manipulate. But I won't say that they are corrupt, even if most of you believe, or most of people will say that, yeah, the government babus are highly corrupt. But it is not true with all the babus. I was also a government babu. I was in Indian Economic Service and even in civil services also. I had worked for about 1.5 years. So I am a 100% honest person, and probably that is one of the reasons that I left civil services. But yes, there are many people like me in the government department who can be honest. So I hope probably all regulators are honest, because it is a very high it is a very high position with very high responsibility. Okay, so I expect them to be honest. But anyway, it is for you to believe or not to believe me. And this market manipulation by those 3% who are working, who have established shell companies in Mauritius, it is possible that they might have done it, and whether they did it, that I don't know, but it is possible. So I agree with Professor Damodaran here, though he also doesn't say that they did it. He says that listing prices. So publicly traded companies are required to have 25% of their shares be held by non-promoters to stay listed on exchanges. So Hindenburg contends that there are some of the foreign funds that the Adani Group list as non-promoter holding to pass the listing threshold are almost entirely invested in Adani company. So it is a fact. He gave the data, Hindenburg, that the Adani company, these groups, these 3% of the family members who are posing as foreign funds, they have invested 100% in Adani family, and we cannot dispute that because they gave the data. And so they are controlled by Adani family. So that's why I wrote it. It is possible. So Hindenburg concludes that Adani is being accused of violating listing rules and covering it up. So listing rule is that the publicly traded companies are required to have 25% of theirs be held by non-promoters. So if I go back to my Excel sheet and I say that 72.52% is held legally by Adani, and these 3% family members, which look like shell companies in Hindenburg report, so if they are added, then it becomes 75.52% of the Adani group controlled by Adani family. And that is a violation because they cannot have more than 75% control. So if they are having more than this, then they should be delisted. But well, it is for the courts and others to prove, not my job. Okay, now I go to the last part, and which is the valuation. Okay, so Professor Damodaran write again, to be able to manipulate and move the market capitalization of a company by 100 billion, which Adani lost only during the last 10 days, roughly the increase in value in 2022, you would expect to see huge numbers of shares being traded in these entities. And I don't see that. Well, it doesn't have to be huge numbers because not the entire 100 billion was manipulated. Okay, some were achieved by growth, and you don't need too much trading when the float is very low and demand is highly elastic. As I already gave you the pictures, that when the demand is highly elastic means in this area with a small trading percentage you can bring large changes in the market. Well, if you are here in the demand curve, then for a small fall in price you need to trade a lot, but here for fall from here to here you need to trade only this much. From here to here, such a big fall, you need to trade only this additional 7%. So in only by trading less than 10%, these people can make the market drop by more than $100 billion for sure. So it is not it is here economics. That is what Professor Damodaran has not studied, I feel, or at least he has not studied so deeply. Otherwise, he could have understood the dynamics of demand curve and would not have found it a mystery. Okay, so what is the cure? Well, these guys made Adani poorer by $100 billion because they had a lot of institutional power. Just Hindenburg report posted, and these 3-4 institutional investors sold, and Adani stocks fell so swiftly. So there is a cure for that. Means if these few people, only 3-4 institutional investors can wipe out Adani's wealth, 60 or 70% of the wealth, then why not government of India can cure it? Okay. So let's see what is the cure. What I had written here, Professor Damodaran has written this sentence. I am puzzled that Hindenburg's short thesis spends as much time as it does trying to convince us that the company is over-levered. Over-levered means a lot of debt. Even if you believe Hindenburg contention that a low current ratio equates to higher default risk, being over-levered is not a con game. Okay? He is correct, Professor Damodaran, that it is not illegal, it is not a con game, but a risk, perhaps poorly thought through one, but one that equity investors in many investments take to increase their return. Yeah, people borrow to increase their returns because borrowing is cheaper. So I agree with Professor Damodaran here that it is not a con game, and Hindenburg had just hyped it. Okay, now then his assessment is, Professor means Damodaran's assessment is, as for the institutions involved, which include banks, regulatory authorities, and LIC, I have learned not to attribute to venality or corruption that which can be attributed to inertia or indifference. Yes, that is a wide strategy of Professor Damodaran, and I agree to him that we cannot call these regulatory authorities corrupt. They may be negligent, indifferent, or inert, means not take action at the right time. They just remained inactive. So that doesn't mean that they were corrupt or they are corrupt, or they can be indifferent because they are getting a fixed salary, they are not getting bonus, so they can be indifferent or it is not their problem. The regulators don't have this problem if the company stock prices falls. So I agree with Professor Damodaran here that this violation means market manipulation by those 3% of the people, Adani family people, whom Hindenburg alleges. Regulators might not have seen it because of their indifference or because of their inertia. So I agree with Professor Damodaran. And then he wrote, the biggest con in history is this. This is a hyperbole by Hindenburg, and I agree with Professor Damodaran. Okay, now it may be an hyperbole to reduce or to make the prices fall more swiftly. Now, he says, Professor Damodaran, Adani not notwithstanding all of its flaws, is a competent player in a business infrastructure, which especially in India is filled with frauds and incompetence. Okay. Well, Adani is not only a competent business player, but he will be the monopoly or a dominant player. So, monopoly has a lot more market power than any other market player in the other market forms. So he says, he talks about ESG, and ESG is environment, social, and governance. And he, Professor Ms. Damodaran, says that it is one of the biggest cons. Biggest con, he says, no, here. And I agree with him that yes, it is a biggest con, or since it has this biggest con means since it has the support of governments, so it is legal. Though for finance professionals and economists, it can be biggest con. So I agree with Professor Damodaran here, and he says that well, if Adani default, in fact, if Adani happens to default on its debt, I hope that it starts with the green bondholder. That is what Professor Damodaran said. That he says that green bondholders should face the first default. Well, I know Adani will not default because first of all, Adani Enterprises has enough cash, and since Adani controls all the 8 companies, so if he has some cash in this company, he will pay to the other one easily. It is not that he has to take any board permission since he controls about 75% of the stocks, and then he has also very close relations with government. So it shouldn't be a problem for him, and Adani will not default. So this default is really a far-fetched thing as per my assessment. Then Professor Damodaran says that without factoring any of the Hindenburg accusations of fraud and malfeasance, yields a value of just rupees 945 per share, well below the stock of price of rupees 3,858 per share. It was then when Professor Damodaran calculated, and he has given the calculation here below. Well, I disagree to that completely because there is no way that Adani Adani Enterprise share price will fall to 945. That is my assessment because Adani is a growth company. On Friday, the price of Adani Enterprises was per share was rupees 1847, and it was rupees 3,405 on January 25. So January 25 means 6 days, and yesterday it was 10th. So in 16 days, the prices halved. Well, they had fallen more, they had gone to 1,000, but then swiftly rose. Now, with price of 1847, the price is not going to go back to 945. Why? Because all the accusations and all the damages that these companies could do have already been done. So the chance of falling prices are there only on Moody's report. Moody's report gave a negative outlook today for 4 of the firms of Adani, and it remained the same stable outlook for the remaining 4. So that may bring this prices of Adani stocks down on Monday opening, but then that will become a what I would say good opportunity for investors to invest after that, I would say, because prices are not going to fall much after this Monday. Now Adani Group will have near monopoly power and a strong political ties. So high growth is actually not going to increase the risk. The risk is going to be reduced. They will keep growing high, and then they will also keep keep good friendship with politicians. What if Modi ji goes away? Well, he's from Gujarat and Adani is from Gujarat. Then people can allege that he might be having good ties, though I don't say that. But having a strong political ties with businesses, whoever in power, is not a new thing and is not a problem either. Whoever is the prime minister, he needs he needs businessmen as his friend to provide employment, to provide taxes to the government, and so they are not actually anti-business people. All government politicians, elected politicians, are most likely not going to be anti-business. Okay, it is easy to befriend new politicians in power in India. So saying that Adani has high political risks doesn't look very convincing to me. He says that Professor Damodaran, that those risks increase if the family group companies are built around political connections, where you are one political election loss away your biggest competitive advantage. No, it is not so in India. Well, all the prime ministers are friend of big business. It is up to the businessman that how he befriends the current politician in power. Okay, so based on these things, since I studied his valuation and I agreed that well, it is no way that Adani stock will go to 9 rupees 9.45 per share. Adani price will never go. And my assessment is that it will come back. If government of India would have been smart or had smart advisors, Adani would not have even faced this fall, because they have swiftly taken counter financial measures to save Adani from fall. But unfortunately, we don't have such good advisors or such good economists who are smarter than Hindenburg. So let's see why I am saying that why future of Adani is bright. What had happened, repercussions after Hindenburg report. The latest one is that Norway Wealth Fund sold 200 million worth shares on Friday. Okay, so that is what they could do. It is one of the FIIs, and it sold it. 200 million worth dollar is not much for Adani, but yes, it further decreased the prices because of limited float, and MIC downgraded in its index. When MIC downgrades in index and reduces the weight, it means that all the fund investors who are in the ETFs or mutual funds, they will have to reduce the weight because they are following MSCI. MSCI is Morgan Stanley Capital Index. I had worked for Morgan Stanley, so I know this capital index very, very well, and how the fund managers follow this index to make profit. So if it reduces, then some of the Adani stocks would be sold. Okay, that's fine. I agree. Which will further reduce the price, but how much? That I will discuss. Then Adani, okay. So these are the repercussions that Adani has already suffered from Hindenburg report. The damage has been almost complete. I wrote almost because on Monday the prices may fall since Moody's report has come after the market or on Friday. So some people may sell Adani stocks more, and so the price on Monday will fall. But then why I am saying Adani stock will revive? Will it revive to the high 4,190, the last 52-week hike, AEL? And no, because our government is not that equipped with so many good finance advisors. So it will not rise that much, but of course it will rise. Now, why will it rise? Because LIC chairman has said that he would meet Adani Group management soon. And he would meet means not for selling Adani stocks, but buying more. But how much more can he buy? That is what my prediction is. And it is for you to see if my prediction comes true. And if LIC chairman decides to buy some more Adani stocks, means Adani stock will go up. And then SBI and Bank of Baroda will also follow that, follow their respected LIC chairman. And maybe these smaller public sector banks like Union Bank of India, and they may decide to buy some of the Adani stocks. After all, these banks are allowed to buy some of the company stocks. So if these people are going to buy Adani stocks in the name of, say, even country, then also it will be boosting Adani stocks, okay? And then another problem is these short sellers who have sold it now. they will have to buy back. It is not that they have sold like Norway, this sovereign fund. These short sellers have borrowed from institutional investors and sold it. So they will have to buy back. And when they will have to buy back, the price of Adani will go up. Okay, so that is another reason why this price of Adani stocks AEL will not reach 945. The time for short covering is coming up, or they might have started covering. That's why the Adani prices rose during the last week from 1000 to 1800 they reached. So it is because of that gradual short covering. They sell swiftly so that the price fall is too much, and some panic sellers like Norway sovereign funds, they come and sell it, but not and then they buy gradually in a small, very small quantity, so that the market impact is much less. So that's how they are going to do. Now it will take long to reach the previous level of rupees 4190 for Adani Enterprises Limited AEL. That was the 52-week high, because Government of India doesn't have good economics and finance professionals or economic advisor to the PM smarter than Hindenburg team members. Of course, these Hindenburg team members have made 50 to $100 billion in this deal and short selling, and they are containing smart people. So if the Government of India, smart people can be beaten by smarter people. But our Modi ji doesn't have that kind of smarter advisors who can beat Hindenburg team members. So that way it will take for Adani to recover. It will take a long time for Adani to recover. It may, but I hope he will recover before May 2025. That is my big bet that he will. Okay. Then I'm saying that, well, had the government finance professional economic been smart, then Adani stock would not have fallen at all. It would have, when the moment report came and market got panicked, these guys would have made an announcement and to support Adani, and then Adani stock would not have fallen, and it might have even reached to 4,500. Not that only support, they would have given the concrete strategy that how they are supporting Adani stock and why markets shouldn't panic, but they didn't know what to tell, and so they didn't support Adani Group and they left it on the mercy of Hindenburg or foreign institutional investors. And that was a bit sad. Being an Indian, I feel that, but that is the reality. Instead, they would have said, okay, so what would happen? They did short selling. And if these government babus would have taken quick countermeasures, then the price of Adani stock might have gone up from 4190 to 4550. And then all those short sellers would have lost money. Because in that case, they sold for 4190, but they would have to cover it at rupees 4500. And that was the loss of about 310 rupees per stock would have been a big loss to them. Okay. Why should Adani stock have gone down? Well, there is no reason. Because Adani didn't do anything stupid recently to suffer this loss. Adani didn't make any wrong business decision. He didn't he didn't lose the goodwill of our prime minister or other political leaders, because he has been doing a great job for the country. Why will the PM and other ministers be angry with him? So Adani Group didn't do anything stupid. And this only on the allegation of Hindenburg, he lost more than 100 billion. And that because the government couldn't save Adani quickly, though they can. Even now, if they announce correct countermeasures, the price of Adani stock will go up to 4,500 within a week. It is not that it will take long. Within a day, it will rise 1,000, another day, another 1,000, and it will reach 4,000, more than 4,000 easily within a week. That is my assessment as a finance professional. I can say that because I was rated as the best finance professional with my colleagues on Wall Street while I was working with them, and by qualification also I am a CFA charter holder, which is considered the gold standard in finance. And apart from being MBA finance from number one international university in United States and PhD in economics from University of Connecticut. So that way I know this corporate world business, the research techniques, and how the markets are being manipulated and what are the countermeasures to stop market manipulation. I know all these tricks very, very well. But anyway, I am not in the government, so I am not going to tell anybody what to do. So that's all. I am pretty confident that the Adani stocks will go back, but don't take it as my recommendation to buy Adani stock. Just take it as a watch and assess me if I am going to be correct or not. So if I am going to be correct, then you may take my advice in the future, but for that I will do more detailed study. Right now I have only responded to Professor Aswath Damodaran. I hope he agrees with me or he responds back to me, and then we will have a further discussion. So that's all for today. Thank you all for watching.